Alrighty, welcome back to another episode of RE Radar. Once again, as always, I'm your host and realtor, Nathan Mathisen. And if this is your first time joining us, first off, welcome. And a little bit about the radar here. What we are all about is education. And I try my best to provide helpful tips, advice for someone who might be looking to buy a home, maybe sell a home, or even just at some point you think that you're going to be getting into real estate. This is a podcast meant for you. Today, how I'm going to be doing that is by talking about something that might get glossed over a little too often. And that is, what is the actual cost to buy and own a home? Because a lot of people go through the process thinking, can I afford the monthly payments? And, well, that is part of it. Don't get me wrong there. It is not the full picture. And honestly, this is where I've seen a lot of people get into situations where they feel just a little too stretched or stressed after buying. Not because it was a bad purchase at all, they love the home, but because they didn't fully understand every financial component that comes with it. So today, I'm going to be breaking down that full picture. We're talking about the upfront costs, getting into the home, the monthly costs, and the stuff that really nobody talks about. So buckle up, folks, because it is go time. All right, so starting off at the start, what does it take to get into the home? What does it take to get the keys? The first thing everyone thinks about is the down payment. Now, depending on the loan, that could be anywhere from 3% to 20%, or of course, more of the purchase. You can put down all of it if you want and just buy it outright. That's cash. Or if you're a veteran, you could use a VA loan with 0% down. Now, everyone's situation is different. Higher down payment, what does that mean? Well, it means your monthly payment is going to be lower. But of course, you'll have to put up a lot more money up front, which a lot of people might not have. And now down payment is important, but it is not the only upfront cost. That's where some people might be misunderstood. You also got closing cost, which typically land somewhere around 2 to 4% of the purchase price. That's going to include things like lender fees, escrow, title, and also prepaid items like property tax and insurance. Then on top of that, you've got things like doing an inspection, which that can run you around $500. You throw in doing a sewer scope, that's going to get it up to around $800 total dollars. Now, then you've got the appraisal you'll have to pay for with the lender. That'll be around $800 as well. So that can easily add in another $1,600 to a couple $1,000 up front, depending on your exact situation. So before you even get the keys to your house, you're already spending a pretty significant amount of money. Now, let's touch on those monthly payments because this is what most people focus on. But even here, there is a bit of a misconception. Your payment is not just your principal and interest. Now, your payment is not just your flat out mortgage or what people think about as a mortgage payment. Now, your payment is made up of a few different pieces. You've got the principal and interest. That's going to be the main chunk and what people think about most when buying a home. But then you've also got property taxes with escrow. You don't have that on a rental. You've got your homeowner's insurance you're going to need. And if you're putting less than 20% down, unless you buy out of it up front, you've got a private mortgage insurance, which with bigger loans, that could be anywhere from $80 to a couple $100 a month at the start. Now, if it's a condo, what do you have? Well, of course, you've got an HOA payment, a homeowners association. And that monthly HOA payment, it might be anywhere from $200 or $300 per month to over $1,000 a month. In Seattle right now, for one bedrooms, what I'm seeing a lot of is $300 to $500 HOA payments. For two bedrooms, I'm seeing a lot of $600 to $800 a month HOA payments. So they can get steep and expensive fast and really add to that monthly payment you need to make. So the question of what's my monthly payment? Well, there's a lot more baked into that than most people realize. Now, this is the part that I think can matter the most, and that is the costs that don't show up cleanly on any sort of loan estimate you'll ever see, but they are definitely real. First is maintenance. A general rule of thumb that people say is about 1% of your home's value per year is spent on maintenance. So if you buy an $800,000 home, that's roughly $8,000 a year in maintenance. Now, that doesn't mean you're going to be spending that every single year, but over time, it is going to average out to around that. We're talking about with roofs, appliances, plumbing, landscaping, things wear out. And it's not a matter of if something breaks, it's when. Because I'm sorry to be the bearer of bad news, but nothing in a home is permanent. Now, next up, you've got utilities. You've got water, sewer, electricity, gas, garbage. And a lot of times, those are going to be a little higher than what people are used to paying when renting. Then there's, of course, the stuff that people don't plan for at all. Or maybe they might have planned for it in that they want to do it, but they just don't really take a moment, take a step back to think about what the costs will be. With this, I'm talking about furnishing the home, little projects, doing some upgrades, because you're going to move into this brand new home for you, and all the furniture you already own doesn't fit the space or style. And you need to buy new couches, chairs, tables, beds, and that list goes on and on. Then maybe the paint doesn't fit your taste. So now you want to get everything repainted. And maybe some of these aren't going to be year one projects for you, but they're on your 5-year plan with redoing the bathrooms and or kitchen, doing some landscape work to your yard. So all that spending, it adds up quickly. So when you think about it, rent is going to be that maximum you're spending each year. Now, of course, note that rent likely will be increased by your landlord every single year. So it'll go up year to year, leading to you spending more and more money each year you stay at that place renting. But when you own, that mortgage payment, yes, it doesn't go up, but it is still the minimum of what you'll be paying every year, with then the number of additional costs that always come up and are always added on to owning a home. Now, next up to chat about isn't necessarily the costs, but it's about what the added costs might bring, and that is a potential change in your lifestyle. Just because you qualify for a certain price point doesn't mean you're going to feel comfortable paying that price point. A lender will approve you for about a 50% debt ratio. A lot of people don't want to spend half their monthly income on housing. Who can blame them? So you've got to ask the question to yourself, can I still save some money? Can I put some aside? Can I travel still? Can I handle some sort of an unexpected repair or medical emergency without stress? Because homeownership should feel stable, not like you're walking on some sort of financial tightrope every single month. You got to pay that mortgage. With all that being said, I don't want this to come across as some sort of negative Nelly aspect here with buying a home, because there are real benefits to owning a home. You're building equity over time. You've got some stability with living in the same place. You have control over your own space. You can make it your own, and long term, it can be a really strong financial move. But the key is going into it with your eyes open and having a full understanding of the whole situation. So if you take anything away from this episode, it's this: buying a home is not just about affording the purchase, it's about affording the ownership. When you understand the full picture going into buying a home, you put yourself in a position to actually enjoy the process and enjoy the home you end up buying. Now, that is all the time I've got for this episode of RE Radar. As always, if you have any questions about what I said, or if you have any personal questions about your own situation and want to talk through it, feel free, reach out to me. I'm always happy to chat. But until then, as always, my name's Nathan Mathisen. Thanks for listening. Thanks for watching. Peace.